Hello, this is the Right Side Trader. Today is June 23rd, 2025, and it's a quick trade review of this SPX Iron Condor trade that I'm practicing in the virtual account with live data to kind of like train my brain to see how this works, does it actually really works, and what to do when you get in trouble. And this is one of those days where I thought I was going to get in trouble, so I ended up taking my maximum loss that I like to take on this trade if I'm going to take a maximum loss on this trade, and then try to use that same product to make the money back. And the last few times this has worked, and it worked again today. But I'm going to just give you a show to show you exactly, show you what I was doing, what I was looking at, and what caused me to actually change my plan from trying to let this iron condor trade work out for me and all. And this is the way I do it, and this is the way I'm training myself to see this trade and to execute this trade based on the past few months, how I've been looking at it. And I'm getting at a point where I'm trying to be really consistent about how I go about doing it. So like I say, this is all for educational purposes only, no trade recommendation, because as we all know, you can lose money at trading and all. And I did have a loss on this trade, but then I usually look, okay, I want to make. I have other trades too. Well, even in the live thing, I have other trades that I have usually going on at the same time, or soon after that trade is going on, and made some money. But again, I don't want to be having a loss in another position, and then I'm coming out, even for the day. I need to make that loss back some kind of way, and see if I can make myself whole, as I always say. I'll come out with the amount of money that I want to make for the day. Put this iron condor trade this morning. I sold the put side at 59.25 and 59.25 to 59.15, and all on the call side I sold at 6,610, and all that ended up receiving a $2.60 credit. I was going to close at $1.95, that trying to collect that 25% of the credit that I received on that trade. As you can see, though, I ended up canceling that trade, that order. I ended up canceling that. This is where I actually placed it and all. And then I had to end up closing that trade, for $1 more than what I had opening it for. And I had opened it for $2.60, and then I ended up closing it for $3.60. Because that's the maximum loss. And I looked like this thing was going to actually go against me quite a bit. And I don't want to take the mother of all losses on this thing anymore. I've done that a couple times to see what it was like. Try different things. What should I do? And the thing that I realized for me, I'm a director. Mainly, I'm a director. I've been directional trading ever since I've been trading them now. And I would do a few iron condors, a few credit type trades and all, or I sell stuff against my position, or I sell stuff to get into the position. I do it that way. But just doing a straight out, spread or some kind of diagonal or some kind of calendar or some kind of all these other trades that they do, no, I don't do that. I try to keep it simple for myself and all. And this is how I usually do it. And this iron condor trade, I've done it before and all. And it never really excited me enough to make. I can see the market directionally pretty good and all, and I'm okay with scalping the market. I don't think I have to catch the full run of whatever's happening. I can capture a few cents, a few dollars of that, and I'm okay. And it's all based on the position size, and if I get comfortable with that position size, whatever I'm trading, that makes it even better, So that's what happened this morning. So I ended up, like I say, taking a dollar loss. Then I ended up buying a straight call. We're going to take a quick look at the chart. I ended up just buying a call right here and all for $13.80. And then I ended up just catching a small little bit, $1.60 on that call, and got me out of it. So that made that dollar back plus 60 cents. And that's what I do. That's the way I usually do it, and that's the way I usually just scalp the market like that anyway. That's normally what I do. And also that was kind of like and based on where the market was trading at and based on what was going on this morning, I was okay doing that particular trade to get myself out of that. Let's take a switch over to the charts where you can see the charts, and I'll show you on the charts what I was looking at, what made me okay about going about it the way I went at it. I'll share that with you. Again, no indicators. I don't need tons of indicators either. The indicators and all these other tools and stuff, they all come from what we're looking at here on the chart. They come from price and price action. The thing is, I've been looking at this for quite a few years. So again, the indicators are ingrained in my brain, and I do use indicators at times. I just like having my price levels and understanding the supply and demand in the market. So again, this is the SPY. First of all, I'm looking at the SPY, and I took a quick look at this morning because of what had happened, what our president did and all, and we ended up with this big gap down. But I noticed right away this market did a little push down. This is the 5-minute chart. I always look at the 5-minute chart. Those who've been following me, I just look at the 5-minute chart. I don't need all the noise. This is enough noise for me right here. And the market, I did an initial push down and all, and then I noticed it had started climbing up overnight. I'm just looking at this after the fact, and that's the whole thing. I noticed the market slowed down here at this little supply where this market couldn't get back up over here on this previous day, and that market hit that. Then today, the market got here and it drove pretty hard to get back up here to this supply up here So around this time frame, let me delete this. So that's how I'm looking at the market. I see all this other stuff happening, all this ups and downs, and these lines right here, this green line here, this is what I call an L1, and this is what I call an H1. These lines usually act just as strong as support and resistance lines as my SVE pivots. I have these other lines that I have on here are SVE pivots. So again, when I see something happening like that at my L1 line, I say, okay, I got something here. So, and a lot of times if I see something like that happening like that, I expect it to go from this point to that point. And it did it today. And it can go further, or it may not go. It may not work. Nothing is 100%, but that's what I kind of expect and all. And it's not going to happen right away. It might take a few hours, for that to actually happen. But these are intraday type things that I use and all. So that's that. So now let's switch over to now that you've seen this was just so you can see the overnight. You want to see what was happening overnight and what was going to be, what was your highs and stuff, what was your lows and stuff and all, and how did it act about getting to those highs and lows. And then during the market, looking at the SPY, I can see how it happened once the market opened, once it got to that place, or what could possibly happen if it got to that place. That was the other thing. So now I'm going to switch to the SPX, what was actually trading, and let's take a quick look at that, and then we'll be able to wrap this on up. I'm going to switch back over to SPX and zoom in a little bit here. And on SPX, the lines that you see on here, this purple line is the line that I actually sold at. We can see it was around this level. These lines here, my custom lines are pretty much, they are for each product. They are calculated based on the price of the product that I'm actually trading. So that's just like SVE pivots. They are calculated based on the product that you're actually trading. We can see, if you remember, the time that I actually got out of this trade when I saw it going bad was 9:59. So that's at 10 o'clock. So that was right here when it had already crossed this level here. Once I had saw it cross this level here, again, I've said this before, if you watch my videos before, when I review these trades when they look like they're going to go bad on me, it's always right around this time. I expect it to go all the way to here whenever that happens. So that's why I was out of it. I got out of this trade right away, took my loss, my dollar loss, and then if it's going from, what's this, 59.86 to 6,000, that's 14 points. I can pull $1 out of 14 points. I can pull almost $2. I could have pulled $2 out of 14 points. But all I'm looking to make is anywhere from $5,000 to $10,000 a day. If I make and I pull $6,000 out of this trade, the difference between this $1.60 and this dollar is 60 cents. 60 cents. Everybody hear me say 60 cents. 60 cents with 100 contracts is $6,000. So. And that reaches my goal even after commissions are pulled out of that. Commissions is not going to be no more than it's not going to be $1,000, So I'm okay with that trade. And that's what I did. That's what I saw was possible. I ended up getting into that long call right at around 10 o'clock. So right around this time frame, right in here somewhere in this area, and expecting it to go here. So again, even if you're looking at this as at 59.90 in all, 59.90 to 6,000, that's $10 at a .5 delta. I'm trading at usually right at the money options and all. So again, the money is there. You got to be able to see that type of stuff and all to make these type of trades. And again, nothing is what you see may not be right at the time, and all anything can happen. But that's where I'm willing, based on my trading plan and my experience, to take that risk on taking that trade, and only looking to make $1 and something, $2, make $1 and something on that trade, and that's what works for me. And that's all I really kind of want to share. I just want to let you know that this trade, yes, people ask about this trade. I see people questioning this trade. Is this thing really? Again, once this thing got up to here, if you'd have been in this trade once it got up to here, you'd have been probably this thing would have been worth about $5 or $6 and all, because I closed it for $3 and something. It'd have probably been at $5 and stuff. It'd have took all your credit that you received plus an additional $2.60, and then you'll be all whining and all that kind of stuff and all blah 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 and all. But then it comes back in here, and by the end of the day, it may be okay. That's the whole thing. But it's usually around 11 o'clock if I want to be patient. But I don't like it even going here and don't want to take that chance of it going up here. It went to this is my resistance one line, and it did what a lot of times when it does at a resistance one line, it gives you a little bit of a pullback, and that may have given you a chance to get out of this trade. But I don't want to go through all that. I see something happening. I see it breaking an area where I expected it to break. I see there's a high probability, high chance that it's going to go to this next level. Take my trade there if it's enough room for me to make the money, to make back the loss that I made and make enough profit where I can be done with this trade. And that's what I do. And that's all I really want to share at this time. Again, it's just that I have to practice this trade, try different things. I've tried doing credit spreads on with this trade. I actually did rolling this trade out in time and all, and receiving a credit and all, and giving it a few days to work for me. That worked and all. But I don't like, again, with things going on, with all this crap going on now, I'd rather do something quick and easy and be done with it and not have as much money, have as much exposed in the market at this time, holding stuff too long, especially on a trade like this. If it was a smaller trade and all, maybe I could do something like that. That's my Tesla is on the move. And that's all I really want to share. That's it. I got something else I got to go look at right quick, and I hope this is being helpful. Thank you, new subscribers, if you made it all the way here to the end. This is one of the other things that I do. I try to explain the different trades and different strategies that I am trying to look at and do, and maybe it's something that you can actually practice and try to do yourself and all, and see if it's something for you. I believe in practicing in virtual accounts. I don't have millions of dollars to actually, throw even one contract. I don't want to lose $1,000 on these trades. You easily lose a few $100s on these trades, and I don't want to go through that kind of learning experience. And that's why I tell people, you're going to lose money in the market when you first start trading if you don't get any, especially if you don't get any education, because that education is going to be you trying to figure out what's going on, because there's a lot of things going on out here and anything can happen, and you're just not going to be prepared for it and all. Because if you've never done it before and you've never seen it before, this is an easy way, cheap way, inexpensive way other than your time to see how things actually work. Give it a try. That's all I can say, and that's all I have to share now. This is Right Side Trader. Hope you guys have a great week. My week is starting out okay, and I'll make that money this week, and I'll talk to you next week.